Your shoebox of receipts is not a bookkeeping system. Your bank app is not a bookkeeping system. Your memory, no matter how sharp you think it is not a bookkeeping system. And I promise you, the moment you need to prove a number to the IRS, to a lender, to a partner, or to yourself at 3 in the morning when cash gets tight, none of those 3 things will save you. This is the owner's ledger, and today we're building the simplest bookkeeping system that actually works for a brand new business owner in the first 2 years. No accounting degree required, no $1,000 a month bookkeeper required, just a system that keeps you legal, keeps you sane, and keeps you ready to hand a clean profit and loss statement to anyone who asks for one. Here's the stakes, and I want you to hear this number carefully. The average brand new business owner mixes personal and business money for the first 8 months of operation. 8 months! That means when tax time hits in April, they're staring at a bank statement that has groceries from Trader Joe's, gas from Chevron, a Netflix charge, a car payment, and the $1,200 deposit from their first real client, all lined up on the same page, and they have to figure out which is which from memory 9 months later. That's not a bookkeeping problem. That's a memory game with real money attached, and you will lose that game every single time. Owners who don't fix this in year 1 leave an average of $4,700 in missed deductions on the table every single tax year. Some studies put it higher, closer to $6,000. That's not a rounding error. That's a mortgage payment. That's a family vacation. That's your emergency fund. And when the IRS eventually sends a letter, a CP2000 notice, a Form 4564 information request, a 566 audit letter, you cannot answer with a shoebox. You answer with a ledger, or you don't answer at all, and the IRS decides for you. And I've watched that happen to smart, hard-working, well-meaning owners more times than I want to count. So here's what we're doing today. 4 chapters. Chapter 1. The 4 numbers every owner has to track from day 1. Not 50, not 20, 4. Chapter 2. The exact tools I'd use if I had to start over from scratch this Monday with $0 in the bank. Chapter 3. The weekly Friday close, a 15-minute ritual that separates real business owners from people playing business. And Chapter 4. The 3 receipts you must keep and the 8 you can throw straight in the trash. Then I'll give you a specific Do This Monday list so you leave with actions, not just ideas. Chapter 1. The 4 numbers every owner tracks from day 1. Number 1. Money in. Every dollar that hits your business bank account. Not what a client promised, not what an invoice says, what actually cleared and is spendable today. If you have $1,000 in outstanding invoices but only $200 cleared this week, your money in for the week is $200. Truth beats hope every single time in bookkeeping. Number 2, money out. Every dollar that left the business account for a business expense, software subscriptions, materials, contractors, gas for business trips, the $10 Zoom subscription, the $4 Canva plan, the LLC filing fee, all of it. Number 3, money owed to you. Invoices you've sent that haven't cleared yet. This is your accounts receivable, and it is the single most ignored number in new business bookkeeping. Track it in a spreadsheet if you have to, but you must know what people owe you and how many days overdue it is, because a 30-day invoice becomes a 60-day invoice, becomes a 90-day invoice, becomes a bad debt that you eat.
Number 4, money you owe. Credit card balance, loan payments, sales tax you've collected but haven't remitted to the state, quarterly estimated taxes due. These are the silent killers that will bite you if you forget them. 4 numbers. Update them once a week. That's the entire foundation of everything we're going to build on top of. Chapter 2. The tools. If I had to start over Monday morning with $0 in the bank, here's exactly what I'd do in order. Step 1. Open a dedicated business checking account. Not tomorrow, not next month, not when things settle down. Monday. Chase Business Complete, Bluevine, Novo, Mercury, Relay, any of them work. All are free. Takes about 20 minutes online. This one single move solves 70% of your bookkeeping problems immediately, because now every business transaction is automatically segregated from your personal life. Step 2. Get 1 business credit card, even if the credit limit is only $500 to start. Chase Inc., Amex Blue Business Cash, Capital One Spark, pick one. Run every business purchase through that card, pay it off in full from the business checking. Now you have 2 sources of truth that only contain business activity, and you're building business credit at the same time. Step 3. Pick a bookkeeping tool. Wave Accounting is free and honestly fine for owners under $100,000 in annual revenue. QuickBooks Online Simple Start is $35 a month and worth every penny once you cross that $100,000 line. Xero is another solid option, especially if you have an accountant already using it. Pick one, stick with it for at least a full year before switching. Do not, and I really mean this, do not try to keep books in Excel forever. You'll last 3 months, maybe 4, before you burn out and abandon the whole system. I've seen it 100 times. Step 4. Connect your business bank account and your business credit card to the bookkeeping tool. Every transaction flows in automatically overnight. Your only job is to categorize them once a week. That's it. 15 minutes. That's the whole game. Chapter 3. The Friday Close. This is the ritual that separates owners who know their numbers cold from owners who guess and hope. Every Friday afternoon, or Sunday night if that fits your life better, whatever your rhythm is, you sit down for 15 minutes and you do these 5 things in order. 1. Categorize every uncategorized transaction from the week in your bookkeeping tool. Most modern tools guess pretty well, so you're mostly just confirming and fixing a few. 2. Look at your accounts receivable. Who owes you money and how overdue is it? Send a polite reminder email to anyone over 30 days. A simple, "Hey, just checking in. Invoice number 42 hit 30 days today. Wanted to make sure it didn't get missed." 3. Check your business checking balance and write the number down in a running log. Just write it down. Watching the balance over time, week over week, month over month, is how you spot cash flow problems before they become cash flow emergencies. 4. Look at your business credit card balance. If it's climbing week over week and you're not paying it off in full each month, you're in a slow-motion cash flow crisis and you need to know that fact before it gets bad. 5. Set aside 25 to 30% of the week's net revenue into a completely separate tax savings account. 25% if you're in a low-tax state like Texas or Florida, 30% if you're in California, New York, New Jersey, or Oregon. If you skip this one single step, quarterly estimated taxes will absolutely destroy you next April. Guaranteed. That's it. 5 things.
15 minutes. Every single week, no exceptions, no skips, no "I'll double up next week." I've been doing this exact Friday close for over a decade, and I still do it religiously. Chapter 4. Receipts. Which ones to keep, which ones to throw away with a clear conscience. The IRS technically requires documentation for any business expense over $75. But here's the real practical rule almost no one tells you. If the expense is on a credit card statement or a bank statement, and the amount and the vendor name together make it obvious what the expense was for, you are absolutely fine with just the statement alone. You do not need a paper receipt for a $92 Amazon order for office supplies. What you must keep. Number 1. Physical or digital receipts for any business expense over $75 paid in cash. Cash transactions have no paper trail from the bank, so you need the receipt itself as proof the transaction ever happened. Number 2. All vehicle mileage logs if you're deducting business mileage. Date, purpose, starting and ending miles. An app like MileIQ handles this automatically for $6 a month, and it will pay for itself in the first week. Number 3. Home office documentation. Square footage of your dedicated workspace divided by total home square footage, plus utility bills for the year, plus any home repairs that touch the office space. What you can toss straight in the trash. Anything under $75 that shows up on your card statement with a clear vendor name. Anything already reflected in your bookkeeping software with a receipt image attached. Old paper drafts, printouts of PDFs you also have digitally, and duplicates. The IRS wants proof the transaction happened. They do not want a shoebox of paper. They want a clean audit trail. Here's your specific Do This Monday list. Monday morning, open a dedicated business checking account. Pick one of the 5 I named. Wednesday, apply for a business credit card
any card that will approve you. Thursday, sign up for Wave or QuickBooks Online Simple Start and connect your new accounts. Friday, do your first 15-minute Friday close, even if it's just categorizing the last 2 weeks of transactions to catch up. And next Sunday, spend 20 minutes opening a separate tax savings account at the same bank and moving 25% of your net revenue into it. Do those 5 things this week, and you are already, right now, ahead of 90% of every other new business owner in America. That's not exaggeration. That's the actual bar. Next week on the Owner's Ledger, the exact tax deductions brand new owners miss most often and how to claim them the right way without triggering an audit. Subscribe so you don't miss it. Comment the word ledger below this video and I'll send you the exact bookkeeping starter template I use with all my new clients. It's yours, no strings. Until then, get your books clean, get your Friday close on the calendar, and I'll see you next Tuesday morning right here on the Owner's Ledger.